Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that for the most part, ES balanced above yesterday's VPOC of 56.75, and that tells us that short term buyers are being pretty active over here, and that's why we're going to be using 56.75 to 58.75 as the micro bull bear zone to establish our short term directional bias. So as long as the market holds above that zone, it tells us that buyers can still be a bit more dominant. They can still step in, and then on the upside, as long as we can get a push above 62.5 to 64.5, then we have some open gaps and naked VPOCs above, which can serve as upside targets and upside objectives. But overall, bigger picture, this market is lacking directional conviction, right? So yesterday, we got a pretty decent down move, found support at 45, and then reversed most of the move, right? So at this point, the overall bias is pretty neutral. We know that bigger picture, the market is simply trading within a range. And, before yesterday's sell-off, if we had held above like 62, 63, we were looking for a move up to the open gap at 71. So with yesterday's downside move pretty much being erased almost 100%, that upside target can now come back into play as long as we hold above 56.75 to 58.75. But given the fact that we're lacking that big directional conviction in this market, I think it makes sense to be conservative and play a bit more defense. But as long as we hold above here, we do want to be careful on the short side because we've tested 62.5 to 64.5 multiple times, gotten some rotations there, and this time around, if we go back up there, we could just see a breakout type move, and then we go up to 66.75 to 68.25, and then eventually up to 70.5 to 72.5. So this would be like the final upside objective on the day time frame, this open gap at 71. And then first test of the 70.5 to 72.5, we can expect some responsive selling. 66.75 to 68.25, we could get a little bit of profit taking and some selling over here, but I don't know if it's going to really be the ideal spot to short the market because at that point you'll be breaking out above the 62, 63 area and probably not going to have enough reward to risk to justify shorting initial resistance, but it is a good objective if you're long to take some profit up there. As far as the short side goes, at this point, shorting it above 62.5 to 64.5, we'd have to get some really decent location, and that's not going to happen until the 70.5 to 72.5 zone. So in the event that we do break out to the upside, the 70.5 to 72.5 is very doable. And then over here, there's some decent location, and if on the day time frame we also see some signs of some exhaustion heading into the zone, then it can be a good short setup as well, as long as you're able to get in at a good spot with a relatively tight stop, 2 to 2.5 points. On the downside, below 56.75, in the event that we break below 56.75, we can look for a move down to 51.25 to 53.25, the initial support zone. And depending on how momentum is looking at the time and how weak the internals are, we can still get a bounce at this support zone. But if the other markets start selling off a bit heavier, then even 45.25 to 47.25 is possible. It's just that given how well the buyer responded yesterday, ideally we don't even come down to initial support. But if we do, then we do have to gauge it in real time and see whether the market is behaving really weak and this is a liquidation type move. And if it's liquidation, then we don't really want to fade it. We don't want to step in front of it at 51.25 to 53.25. Then you want to let it flush out. But if the internals are holding up okay, and on the NYC tick, we're not seeing any major downside moves and just some heavy panic type selling. As long as that's not the case, we can still get a rotational type setup here. So, on the downside, not expecting it to break below 45.25 to 47.25. I think over here we can get a rotation back up towards 52, 53. So this could be a long setup in the event that we get a breakdown. If we hold here, this could be a long setup in itself, targeting a move up to the at least the 66.75 to 68 quarter, but ideally even up towards the open gap at 71. So above the micro bull bear, we're going to keep our focus more on the long side and really only look for shorts if there are very clear signs that this market is setting up to head lower. But if everything in real time looks okay, if the other markets hold up okay, then I think the upside move is going to be the one that we focus on as long as this zone holds up. Looking at the other markets, ideally I'd want to see TF, the Russell, holding above 1159, and if it can hold above 1159, then it could set up for a test of 1169, and that's the next inflection point, the bigger picture inflection point in TF. And then if we can break through 1169, then that would be a confirmation that at this point we have some decent buying coming into that market. So off the open, if you're watching TF, do keep an eye at the 57 to 59 area, but ideally we want to see it holding above 59 in order for buyers to step in ES. Looking at NQ, we can see that we have some recent tops at 38.89, and in order to get an upside move in the S&P, I think we should get a upside break in NQ as well. And if NQ can break out above 38.89, then it can lead the upside move, and we can get a breakout in the other markets as well. But overall, expecting it to still more or less balance within a range. It's just going to be a matter of figuring out where that range could be. Above the bull bear zone, the micro bull bear zone, that range could be 58, 59 up towards 71, 72, and below the micro bull bear we could extend to initial support or the support zone below and then start balancing in a range. So those are the main thoughts, main ideas heading into the open. Let's see how well the buyers hold it up off the open at the micro bull bear, and we'll take it from there.